In the midst of the turmoil which followed S&P's downgrade of US debt, the greenback weakened as money flowed into the Swiss franc, yen, gold and treasuries. So can the US dollar still be regarded as a safe haven? To discuss this topic, I'm joined by currency strategist Michael Boutros, who is in the New York offices of FXCM. Michael, why did we see dollar selling when investors were looking for safe havens following the downgrade?
Well, it's just a case of a lot of uncertainty with regards to the health of the domestic economy here in the United States. You know, obviously we're getting a lot of different rhetoric from central bankers with regards to the stance that specifically the Fed has taken, where some of them have really shown a lot of doubt that this vow to keep interest rates low till 2013 is going to be enough to spur economic growth domestically. So that, combined with the downgrade, really saw a flow of havens into, like you said, the yen and the Swissy accordingly.
So can we still regard the US dollar as a safe haven?
When it comes down to the nitty-gritty at the end of the day, investors looking for safe haven moves, there's really not many alternatives out there besides the US dollar. And although there was a shake of confidence on this S&P downgrade, again, the alternatives are few. So if we just look at equities today, we see that although there's a sharp decline in equities across the globe, again we see the dollar starting to gain strength here as it's pretty much besting all the majors right now ahead of the open in the United States.
Is there such a thing as a safe haven of choice maybe? Was it just the case during that time that the franc and yen were just more attractive? Yeah,
that's exactly it. It was just a shake of confidence, to be honest with you. And with what's going on now, I expect that these haven flows will return at a more substantial degree to the United States. Obviously, with Switzerland, the threat of the peg threats, as it were, is to me just a form of verbal intervention, right? And for all intents and purposes, it did work because obviously the Swissy has depreciated substantially since that threat. But logistically speaking, that's to me an absurd concept to even try to peg the Swissy to the euro. So with that threat coming from the S&P trying to do everything in its power to weaken the Swissy, and now we see that the dollar yen is approaching near intervention levels that we saw last month. So I think the dollar is going to maintain haven flows and even pick up more so with these threats from central banks around the world.
So are you anticipating the buck to strengthen? For example, how will it move against the euro?
Well, if we take a quick look at the euro, I mean, the issues there are going to rear its ugly face again. I mean, this run up to 145 was not completely out of question. We did see room for moves to 145. Past 145 is going to be a very difficult threshold for the euro to move on. Personally, I'm looking for a medium-term tag of 142. And if we break below 140.50, which was the low that we saw on the 4th of August, we can expect some substantial euro weakness further to the downside.
So let me put the scenario to you. If the next NFP comes in below par and money flows out of stocks, how will the US dollar react?
I think at that point the US dollar is gonna strengthen even more so. There's not going to be many options out there. There's a lot of turmoil in Europe. Central banks are continually increasing the rhetoric with regards to possible intervention to control the appreciation of their respective currencies. So there's really not much options. I would expect to see a large movement into the U.S. dollars as risk currencies really come off.
Some interesting views there from currency strategist Michael Boutros. We'll pick up the market analysis on Monday. And next week, you'll also get to see the latest member of the Trader of the Month Club. But for now, goodbye.